And I think what happens is that a lot of these long-term holders, especially the big ones, a la Michael Saylor or any big corporation, when they accumulate Bitcoin, they don't move Bitcoin by $1. So their accumulation is never shown in price appreciation in a sense. And it's really more the short-term traders or the mid-term traders are the ones who are really making more impact on price. Not sure if that makes sense, but it's kind of the sentiment I have that the true believers of Bitcoin, maybe it's a good thing, maybe it's not a good thing, but they don't make price appreciate that much.
Yeah. So to answer your question, like if someone's running an accumulation operation, like a large institution, they're doing everything they can to stop price from going higher. So
Absolutely.
that may even involve driving price down. And a lot of times it does. So like we were talking about liquidity context before, there are people who have, big enough bankrolls to drive the market lower to knock people out of their long positions and take the other side of those trades, right? Whether that be liquidating them or stopping them out or whatever, those people become sellers, and then that's how they accumulate. So
Absolutely. I think the only time where like we knew someone was just accumulating crazy is that's when we went from like 12K to 20K. I forgot. I think it was the organization GBTC. Uh, they were just buying like all the buys were coming from Coinbase. That was really fascinating.
yeah, I mean, so I don't like I don't really see like price appreciation as accumulation. To me, I just see it as like, you know, it, well, obviously it's more buyers than sellers. Really, why did price do whatever it did? More buyers than sellers,
Yes,
but sometimes that's not actually, that sometimes it's just that there are not necessarily more buyers, just less sellers, right? So people are just not like the situation we have now, right? I mean, if you if the trend in cold storage accumulation by these long term holders continues, eventually, there is a fixed amount of supply, right? If that trend can't continue indefinitely, at a certain point, something has to give, and you in a scenario like that, you don't even really need to have buyers, right, in the market. You know, you almost can't have buyers because there's nothing to buy.
totally.
So it's not price doesn't always rise because of buyers. Sometimes there's just no sellers. So
Again, I see what you mean. There's just less sellers from a relative
yeah,
perspective,
really,
but
yeah,
at the end of it all, the equation always maintains. At this given moment, there's more buyers than sellers.
pretty much, yeah. More buyers relative to the number of sellers, but there could be less overall. Yeah, I mean, you could have less trading activity, and then prices rising. You know, and like if you think about like
So
what causes a macro bear market, it's actually not necessarily an influx of sellers. It could also be you know there's just no buyers stepping into the market, nobody willing to buy.
and I'm pretty sure these bigger players they know exactly where the liquidity is in the market. Like I'm pretty sure they can get some of that data from exchanges,
Oh yeah,
and they can
100%.
basically
Yeah,
hunt that.
yeah. That's
Well,
basically what they do. I mean, if you think about like Alameda Research or people like that, they essentially move the market towards liquidity. That's really kind of their business. Um, So
I thought they were an arbitrage firm, or maybe they started as being arbitrage.
well, they're an arbitrage. I think they do arbitrage operations, but they also do directionally biased operations, which means running below or above some major high to stop everybody out, um, which is a different ball game than somebody like Michael Saylor who is just trying to accumulate spot. You know, so if you think about like Michael Saylor, like he's kind of in line with the what you're seeing in the rest of the market, right? A lot of people accumulating in cold storage and holding that for a long term. And yeah, I mean, you can't liquidate those guys. It's they don't represent liquidity. They don't have stops. They don't have liquidations. Their cost basis is probably for a lot of those guys, many cycles ago. And of course it goes up over time, but the point is probably orders of multiple lower than the current price. So, you know,
You think?
yeah, I would think so. Yeah.
Yeah, it's very interesting how this is going to be played out.
Yeah. I
The
mean,
only thing, like, I think one of my biggest faults, maybe it's not, is just that I cannot remove the picture of the legacy market, the macro overview, inflation, and so forth. You know what I mean? Because if I just want to paint the picture of Bitcoin itself, like it seems so hopeful. You know what I mean? If I'm just kind of relating short and midterm price levels. But if I kind of look this as a high from a high level, the totality of legacy market and crypto markets and bond market and debt and inflation and blah 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 blah.
yeah, but I mean, just think about it this way, man. I mean, like, this is not the only time in the legacy market that people have been bearish, right? People have been bearish like every year for the last decade, decade or so. So, like, if you look at
But we've seen historical things though. Like if I understand exactly what you mean, but like you and I, we pay attention on the on-chain Bitcoin metrics. You're like, damn, some of these stuff looks very bullish, and I think you and I from day one were like, yeah, the less coins there are on exchanges, the more like this is just bullish. But if you look at like some other metrics on the legacy market, like or just the macroeconomic outlook, like we're having some historical bearish on chain
let me
metrics.
so I'm just
You know
sharing
what I
my
mean?
screen right now. Can you see the spy chart?
Yeah, absolutely.
Yeah, so okay, so I've just got a quarterly chart up,
Sure,
and I'm using anchoring the left side to the '08 crisis. So
sure. What's in it?
this is not the first time that people have gotten bearish, right? And the irony is that people have been bearish all along the way, right? So you know, and the bearishness, if you're honest, probably peaked when you had a down close candle. So people were probably most bearish here, most bearish here, most bearish here, and most bearish here. So, you know, again, price could close on the legacy market below the last quarterly low and do like a dramatic candle like this. But I think the important distinction is that a lot of people would see that and go, okay, this is a multi-year bear market confirmed, right? And that's just the wrong interpretation. Like a lot, I it's embarrassing, but I kind of thought something like that here when the Black Swan event happened, and
Same here.
you know, it's just that's just not in a normal market, like that didn't have monetary debasement. That's what you would see, but you're just not. in my opinion, you're just not going to see multi-year bear markets. Like what I would expect more often is these big credit tightening events, right? Like you saw in 2020, and you can see you know during that event like volatility. That's the most volatility that's ever been in the markets ever, right? So
Oh, absolutely.
so guys in the market were seeing, even professional traders, hedge fund managers, they have the VIX index, which is the volatility index, and they're seeing that go to like historic highs, right? As price is declining, and that sets off all sorts of alarm bells for them, right? It's like, well, fuck, we gotta. This may be the start of a bear market, but and if it wasn't, if we weren't in a if we didn't have the massive money printing, it probably would have been a bear market. But I don't know. So I guess it's a long way of saying that whenever you hear people saying bear market confirmed, that's probably the best entry for a long position. You know what I
No,
mean?
I fully hear you. But it feels like since I'm like consciously following the markets, this is the first time where we have this mandate to strengthen the dollar. But like the direct effect of strengthening the dollar is for equity value to go down. Like it's this synergetic effect. You know what I mean? If all equity goes down, then your dollar is stronger in a sense. So this is how I'm curious how things are going to be played out. That's the variable that makes me more bearish, let's say, from an equity value standpoint. Because again, the Fed and most central banks across the world have this mandate to strengthen the dollar. I mean, we're even like borderline hopeful for a recession in a sense because this hyperinflation seems much scarier than anything else.
Yeah, so I don't necessarily know that they have a mandate to strengthen the dollar. There may be some concern that there may be some interest in strengthening the dollar, but like if you go to Dixie and look at the dollar currency index, you know, I don't really think there's any, the dollar is strengthening against other currencies. So,
Yes, but if you look at cost of well, look at petrol. Can you look at commodities?
yeah, yeah,
Dollar loses strength.
yeah. Well, I mean,
Or if we go,
yeah, right.
that's one. That's such a sick ass wig.
I was actually trading that day.
I was walking outside. I'm like, what the fuck? I remember this moment very vividly.
Yeah, yeah,
But again, coming back to the chart, like you see that the dollar, if you look at wheat, if you look at this and that, and energy, and so forth, like you see that the dollar is, in the grand scheme of things, weakening. So there is a mandate to again reduce the prices of commodities, reduce the prices of real estate, reduce the prices of equity, so that your dollar can purchase more. Um, but we're walking on the eggshells because you cannot go. I forgot who was the Fed leader back then. Just skyrocket interest rates to 15%. If not, you're just gonna nuclear explode the whole market.
yeah, man. I mean, so it's not like this is the first time the Fed has ever raised interest rates. I mean, they raised interest rates in 2017. Um, you know, it, but you have to keep
Yes, but you didn't have 40 years inflation. Like even you and I, when they post 8.5% inflation, you know that it's not true.
Well,
It's probably in the 10, 12, 13%.
it's probably higher than that. It's never been accurate. The
I mean,
number's never been true. So, and it will never be true in the future. I mean, they're just, it's just bullshit.
absolutely. They
So,
changed the metrics to what? So there was actually a website, I should have shared it in the group. I can't find it anymore. They basically calculated inflation based on the 70s metrics of and the 80s. And so with the 70s metrics, it was the highest. I think it was like a 13.5 or 14% inflation rate. Um, and that's pretty crazy, man. I think that's pretty crazy. I'm going to be very curious to see how things play out, to be honest with
I mean,
you. When
yeah. So if if we just take what Michael Saylor said, right, and say that he makes the suggestion that the S&P index is a good measure for the. Well, hold on. Let me just pause this video.